How the heck do we even keep track of what's happening with Qualcomm, the huge chipmaker that's all about communications? These guys basically invented the technology that powers your wireless, okay, and everybody's network. First, they try to buy NXP Semiconductors, which you know we love, to expand into new end markets. Then the deal's held up by the Chinese regulators, a potential casualty of the trade war. Then Broadcom tries to acquire Qualcomm, but the deal's blocked by the Trump administration because Broadcom, technically based in Singapore, though only for tax purposes, the White House doesn't seem to trust Broadcom not to pass on trade secrets to the Chinese, particularly secrets related to 5G, the next generation wireless technology. And to top it all off, last month we learned that Paul Jacobs, former CEO of Qualcomm and the son of its founder, wants to take the company private. Today, Jacobs announced that he's starting a new 5G company himself with some former high-profile Qualcommers. If that stuff doesn't make your head spin, nothing will. But here's the thing. When you put all these stories to the side, could Qualcomm be worth owning simply because of the incredibly good underlying long-term fundamentals? What about, the business? So let's take a closer look with the tech man of the hour, if not the year, Steve Mollenkopf, the CEO of Qualcomm. Learn more about how his company's doing, where it's headed. Mr. Mollenkopf, welcome to Mad Money. Good to see you, Steve.
Jim, how you doing?
Well, you know what? I've known you for a while. You're an unlikely figure to attract this much controversy. You're an engineer. You got a lot of patents. You're really one of the founding fathers of our wireless technology. How do you keep it together during this period?
Well, we have a lot of confidence that we're headed in the right direction. We're buoyed by the fact that what we work on, people care about. So that's that really, every day we wake up and people want the technology that we make, and that makes it good to come to work.
Well, one of the people wants the technology. I'm looking at a story today. Former Qualcomm CEO Paul Jacobs starting a new 5G company while still pursuing a Qualcomm takeover. Is this just a distraction, or is this something I got to worry about as a shareholder?
I don't think so. I think, first of all, we wish Paul luck, and there's a lot of our friends working on that, and they're working in an area.
I don't know if I would be as gracious, but you're a gracious person.
Well, and and if there's something that transpires, of course, we'll listen to it. But we're really focused, as you know, on driving some near-term milestones, which we think are going to create some value.
Okay, considering that at the beginning of the conference call, because you're quite transparent, you talked about some weakness, you still stick by the roadmap to 675, 750, which of course would make the stock tremendously cheap.
We do. We do.
Okay.
And I think the levers are very much within our control. We're taking cost out of the business. We're continuing to execute in the product business. NXP, we hope to close here pretty soon. And so we have really some near-term ability to drive value, and we look forward to doing it.
All right. My travel trust, one of the biggest positions was NXP. I mean, just a fantastic company. You had to pay up. You agreed to pay more for it. But you must be talking to the Trump administration, someone. I mean, is there any chance that ZTE is solved and therefore perhaps you get solved with NXP?
Well, I don't think anybody knows exactly what's going on, but I will tell you this. When we extended the deal with NXP, we did it on purpose to get on the other side of some political milestones, one of them being the discussion on tariffs, because we thought that would provide an opportunity for a deal to get done. And I don't think we've seen anything that was inconsistent with the strategy that we put in place to extend that agreement. So I'm hopeful, I'm optimistic, and I'll tell you, we are very prepared to execute on it.
All right, well, let's say if you don't, if they won't let you, you still feel confident because, you are a huge amount of infotainment. That's all right. You have a lot of auto. It's not just you're not totally beholden to cell phones.
Absolutely. If you look today, we are already diversifying the business into new areas. We have a $4 billion backlog in automotive. It's infotainment, it's telematics, so it's really the connected car and the screen that you see. By the way, if I'd given you that stat at CES, so in January of this year, it would have been a $3 billion backlog. Okay. So it's growing. We know the strategy is the right strategy. It's working organically. But we add NXP, it really accelerates.
Okay, now, if you look at the deck, and the deck is really, again, you're very transparent. You talk about how there are always going to be disputes, that the Apple dispute is just one of many, and that you should be buying Qualcomm stock when the disputes are being resolved.
That's right. I think our view is that there's right now a disconnect between what we think is the underlying value of particularly our IP business and what the market sees.
Property. Right.
And essentially, what we're doing is trying to resolve it. And by the way, it's fairly simple. There's a lot of complication that people talk through, but at the end, we have a contract with Apple and the manufacturers, the companies that make Apple's products, and they don't want to pay. And that's something that we'll resolve. We have a lot of legal milestones in the near term that will hopefully resolve that, and we're confident.
All right, let me play devil's advocate. They are a soon-to-be trillion-dollar company. You're much smaller than they are. How about if they just say, hey, you know what? Knock yourself out. We ain't paying.
Well, I mean, we have a contract. It's a very clear contract. It's consistent with what everybody else in the industry pays, including Samsung.
Which you had a dispute with, and then they came around, and it ended up being pretty much what you said it would be.
Exactly. And so, you know, our experience with this is that these things get resolved. It takes a while sometimes, but we're on the back end of that process. One of the reasons that we were comfortable putting in the numbers that we did that you mentioned was because we know those milestones are upcoming here in the next 6 to 9 months.
Do you think that Broadcom with an $82 bid ultimately would have gotten your company if it weren't for the fact of CFIUS and the Trump administration?
Well, you know, I think it was a situation where there were some questions about deal certainty, which clearly became the case. But I think it's also a case where it's very difficult to buy a company using a hostile. You really have to engage with a company kind of in the front, through the front door. And, if somebody had something like that, we would, of course, look for ways of driving value. But we have a pretty good plan, and we're going to drive it.
All right. Now, there are concerns. There was a great article in the New York Times about what you do for San Diego. I've been out to San Diego. I can vouch for it. But robotics classes, scholarships, museums, local police, foundations. In this new age, Broadcom may not want those, may think, listen, let's get the most maximum profit. You can do whatever you want with your money. But Qualcomm's committed to these type of things. You also committed to a very large research and development company. Are you too much of a throwback in an era where there is capitalism saying, hey, you know what, we don't want that. We just want performance?
Well, I think we invest in technologies that disrupt large industries.
Right.
3G, 4G, now 5G. And we think there are very few situations where there's such a big opportunity to invest in a technology that you're already good at, and then you drive it into the industry and you reap the rewards. And there are very few companies of the scale that have the ability to do that. So we think we're investing the right amount. We're also focusing the company, as you know, to really go after these new opportunities that we've identified and really get rid of the things that we don't think are good uses of shareholder money.
Excellent. Okay, that's Steve Monkoff, CEO of Qualcomm. I urge you to look at the deck, see how they can get to $675, $750, because of course that would make the stock very, very cheap. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.